European markets were muted as investors look ahead to the publication of minutes from the Federal Reserve's November meeting, seeking clues on the direction of monetary policy. The dollar retreated across the board, losing some of the ground gained in the previous session as investors look past worries about China's COVID flare-ups, boosting demand for more risky currencies. The dollar has rallied against every major currency this year, boosted by the Federal Reserve's supersized interest rate hikes as it battles inflation. Locally, Naspers says its interim profit slipped 93% as the technology investor increased funding of its businesses and also due to a lower contribution of profit from its biggest investment, Tencent. Meanwhile, Telkom reported a drop in earnings, dragged by a slower growth in its mobile business, a decline in its legacy fixed-line units, as well as higher expenses. To give us more perspective on the markets, we are joined by Carmen Belana from ABSA Asset Management. Carmen, thank you so much for your time. I mean, given what I've just described, where we are looking ahead to those FOMC minutes, and we're also trying to make sense of what is going on with China and the COVID flare-ups, how would you describe market sentiment right now?
As you said, I think it's a bit of a mixed bag, but sentiment remains risk-off as it stands. A lot of concern about direction in the way forward. We have taken significant amount of pain for the year, but I think that we need some definitive answers out of China, or at least decisions to be made there, which will have a reflection on how the markets react.
Is the worst behind us, or are you still not sure at this point?
I would hazard a guess and say no. And I say no because a more cautious approach in terms of we still see, as you've mentioned, the risk around China. We could see higher restrictions or more stringent restrictions and for longer, which would definitely have a growth impact. And we'll see the ripple effect of that across the globe. And secondly, the risk of a recession is still not off the table. It may have been pushed out slightly into late 2023, but I definitely do not think we have seen the worst.
So I mentioned in my intro that we had results out of Naspers as well as Telkom. Let's start off with Naspers. That share price right now up 2.9%. What did you make of the numbers?
Yeah, so we had been given an update a few days ago, and we saw the share price pull back on the back of that, and it was a warning of a decline in earnings. That has definitely come through. As much as the top line, Naspers had seen an increase in growth, there's been a level, or an increased level of capex investment, and that's led to the significant decline in their core headline earnings per share. As it remains, we've seen them embark on the share buyback program. So that's continued, and they've still asserted that despite that, Tencent still remains a significant contributor to cash flow for the group in terms of dividends. So a bit of a mixed bag. I think the impact of the dividends and also the announcement regarding the shares that they're going to recognize as held for sale has given a bit of a tailwind today.
So then we have Telkom, and that share price at this point up 1.1%. Any key highlights that stood out for you?
I think we'll start with the fact that year-to-date, Telkom is down 33%. We saw a significant pullback after the deal with MTN has fallen through, and so the share price fell post that announcement. In these results specifically, as expected, very muted revenues are down marginally at about 70 bips. Largely across the band for them, we've seen sort of weakness in their different divisions, but more importantly, we definitely saw a significant decline in their earnings, down about 53%. They have indicated that these results are a function of increased competition, of the increased price in terms of equipment, and the general legacy of revenue decline that they've experienced over the last few periods. So as much as it looks negative, I think what has made it worse is the fact that they've reduced their guidance. So guidance for earnings and EBITDA growth have been reduced to low to mid-single digits. But I think they've taken enough pain, as I've mentioned. So today, maybe because there was so much negative sentiment going into these results, we see a slight uptick.
So tomorrow we have the Reserve Bank announcing its interest rate decision. Expectations from your side?
So had you asked me this morning, I might have had a different answer, but we have seen those inflation numbers come out, unfortunately, slightly above consensus and a slight increase compared to the previous period. I definitely think this is going to have a motivation, but at present it looks like the market is pricing in about a 70 bips increase. But I would hazard a guess and say that we're likely to see a 75 bip increase at the next announcement.
Let's take things stateside for a bit. How much of a concern is U.S. inflation right now? Is it still as a bigger concern as it was?
We have seen some tapering on the US inflation numbers. I think we need to be more focused on the trend of it at present. If we can keep it sort of flat as it is, more would be better if it came down. But it's definitely a key driver. So it will obviously give an impetus into how the Fed decides to move the interest rate in the US. And again, that has a general impact on the global markets as well.
Before I let you go, just quickly, anything that's giving you some kind of hope out there?
I don't think so, not as it stands. Again, as I mentioned, that CPI numbers come out, albeit that it hasn't grown significantly. We see the uptick to 7.6%. More importantly, core inflation is up as well. So I wish I could give a glimmer of hope, but at the moment, just quietly standing on the sidelines and watching.
On that note, let's leave it there. Thank you so much for your time. That is Carmen Balwana from Absa Asset Management. Not seeing hope just yet, choosing to stay on the sidelines, but we will see as the economic situation does unfold, both locally and abroad as well. We're going to take a quick break. When we come back, we'll unpack those CPI figures for you, so stay tuned.